Hello, good morning to all. In today's section, we are checking the volatility indicator. This is very important for the risk management and while trading in the option. Let's start. Now, in the last sections, we are observing the two types of indicators, that is trend indicator and momentum indicator. In the volatility indicators, we can find out the price range and where the maximum price can be possible with the specific time period. And if the price above the specific level or below the specific level, then the fresh breakout upside or the breakdown to the downside may be possible. This is generally used for the option writing to check the range of the market. Whenever market in the narrow range, option writing can give the best money with the best risk reward ratio. But whenever the breakout will be done, then movement will be fast and the very big range. So we should always check it will be breakout or the similar range. For that purpose, volatility indicators will be used. This has a two channel, that is upper channel and lower channel. Now the volatility indicators that is mainly used, it is a Bollinger Bands. Bollinger Bands have two bands like upper band and lower band. To know the price of the range should be traded between this range or given a range breakout. Generally, Bollinger Band calculated using the moving average and standard deviations of specific day. Generally 20 numbers is used, as I already shown in last also sections. 2025 is generally main numbers that will be used to calculate the maximum averages and the indicators. It will be also used to check the range and whenever the market in the sideways or it will be directionless or direction market. It is best signal to calculate the risk reward whenever favorable at this level, buying or not, and you can get something or not by initiating the position. Now I will show you on chart how the Bollinger Band will be used. Now I have taken it is a chart of the Nifty of the 15 minutes chart of daily basis, that is intraday. Now we are taken here a Bollinger Band, and that is the length. It is a moving average. I will also show you on chart whenever we are entering the moving average of simple for the period of this like 20, then this red line and our new line will be same. This is a not different line, simple moving average, and this is a multiplication, that is multiplied by 2 for the standard deviation. I will show in the Excel how to calculate it. Now, Bollinger Band is generally used for the range and the trend. Whenever price will be the above Bollinger Band or below Bollinger Band, then fresh position initiated is not favorable in risk reward. You can check here. In the gap of market opening here, but we should be wait and watch and did not initiate a fresh position because it is an outside of Bollinger Band. So it will be, we can't confirm it because from the Bollinger Band we are known there are not upside range. Like here, Bollinger Band is break, but Bollinger Band is also turn because average support it for the upside movement. Same situation here. Whenever it will be a below Bollinger Band and you want to take an intraday position, then it is a not favorable. Now, firstly, we are calculating on Excel, then you can understand it, and again we compare it on the chart. Now everyone will be audible and see the chart in the Excel. Now, for the Bollinger Band, we are required the moving average. That is simple moving average 20. It is very simple. Average for the number of 20. And copy paste the formula till last. Now, here we want a standard deviation. It is a number that we'll use to measure the risk of 20 numbers. Means last it will be calculated from last 20 numbers. It is also simple formula available in Excel is equal to standard deviation of last 20 number, that is B2 to B21, and copy paste this formula till last. Now we are calculating the upper band and lower band. Is equal to moving average that is this number minus 2 multiplied by standard deviation, and upper band is equal to moving average plus 2 multiplied by standard deviation, and copy paste till last. Now, for which purpose it will be used, or like a fresh breakout may be possible or not. Whenever market will be continuously 2 times below the lower band or above the upper band, then will be fresh breakout, maybe downside or upside will be possible. Now we are using this formula in Excel. is equal to if price is less than lower band, comma -1, maybe downside possible, otherwise 0 is equal to if price is greater than the upper band, comma 1, comma 0. And copy paste till the last. Now here is an one time -1. But it is only one time, means market go only one day closing, but after that again recover and normal. Here is an continuously three times. Then you can check that continuously price movement toward the upward directions, like a breakout to the upside. Same situation here, continuously two times, and market go continuously two times upward directions. Same situation here, continuously upward further two times. Now you can check in the month of the March. Here is an below the moving upper band and below the lower band. So it is a negative from the 20th February, and market movement started downward. Again continuously downtrend is continued, and it will toward the lower level 7,610. After that market not showing the downward side, it will be in the limited range. Now on the May, market go toward the 8,800, but again we continuously in the normal range. Same situation here. When the first time 9,800 cross after the month March, then continuously upward direction is done. Now you can check it. Upper band is 11,664, and market cannot be close above the it. Whenever may be closing above it, then 200 to 300 upward points in the Nifty may be possible. Now you can check it. It will be shown as on the chart. It will be generally used for the breakout. When this breakout is supported with the moving average, then you can get as an golden jackpot. Now I am drawing here our 20, 50 and 5 moving average strategy, that is triple moving average crossover, and show you whenever the Bollinger Band is also bent from one direction and the moving average crossover also, then you will get the golden jackpot with best risk reward ratio. Now you can check here. Moving averages also supported and Bollinger Band give the breakout. Then it is a very best risk reward that you got. But whenever Bollinger Band is suggested and stable, like an straight line, then market is an range bound. And this type you can't earn money by initiate a buy position or sell position with the best risk reward. It is an best time to make an option writing and earn the time value for the premium. And whenever it will be a gap up or gap down and outside the Bollinger Band, then the fresh position initiated should be risky. Maybe your stop loss will be hit. So you should avoid the fresh position whenever Bollinger Band outside the prices. Now whenever it will becomes the moving average, then you can take a chance to buy or sell it. I hope everyone will be understand how to use the Bollinger Band. If you have any queries, please enter in chat box. For the both, Bollinger Band will be used. It is generally used for the fresh position can be possible or not at this level. because standard deviation is very important for measuring the risk that I will show in the portfolio management and how to calculate standard deviations and what is mean of it. Okay, so now I will show you the risk reward calculations on the Excel. Now, in this I will entering the value. As per the this chart, I am entering here other indicator RSI. Now I will show you what is a risk reward. Everyone should be know our exit point, entry point and stop loss. That 3 points are very important while initiate any trading. Now, as per the moving average crossover strategies, at this point, triple moving strategies crossover is done. But this price is the 11,478. The stop loss at this level as compared with the parabolic SAR or Bollinger Band, both levels are same. 11,443. Round figure we are taken 11,440. And the target may be maximum at above Bollinger Band or limited to Bollinger Band, like 11,500. Now we are calculating here. I will show you in the Excel. Now you are check the difference as per the moving average signal. You should be buy and positions. Entry points 11,478 and stop loss as per the parabolic share and Bollinger Band 11,440 and target will be 11,503. Now your risk. And you get what is an reward. Your risk is equal to entry minus stop loss, 38 point. And you can get reward as per this strategy: target minus entry price. That is 25 points. But your risk is 38 point. Now is equal to reward divided by the risk. That is only 65%. Whenever you want to rupees 1, but your profit may be 65 only, 65 paisa only. It is not favorable because risk is greater than the reward. So at this time, we can wait and watch, or we can initiate the option combinations that we learn in next time. How we can learn it option combinations and reduce the risk. So we are wait and watch at there. And whenever Bollinger Band is done, you can check it. Moving averages in the formula we learn standard deviation plus upside is equal to above Bollinger Band. Whenever it will be turned, then you can get a first signal. Maybe upside more possible. And when we are initiating position here, like 11,490, stop loss 450, but your target may be increasing maximum to this level, like 515, and stop loss is 450. Now taken same again here.